The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk through loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. Let me get set here. We're going to talk about the S&P, that bear market. It wants your money. It wants your retirement. It wants your savings. It wants your hopes and your dreams. It wants that. The future. It wants it all. Let's see what we got here. We got a chart of, it's a monthly view of the S&P 500, just for some context. If you haven't seen the video on this channel of my 90-year wave count per Elliott wave theory, check it out. It gives you the context. But this is the S&P 500 since 1970. Okay, and this is the run since 1990, and this is it since 2020. So some are calling for a huge correction that we're in, saying that we're in a correction right now. That would, in the first leg down, bring us to this level, and then we rise, and then we go lower. Maybe to the mid-90s prices. But if that happens, we're talking about, $500 or something from $4,000. So that's pretty severe. We got people listening that wasn't even born, or that was born around this time. So that's just the scale of the thing. I am not quite, let me say, ultimately, we are going to have that level of correction, but it may not be right now. I am in the camp that maybe we'll see how far we go. If we fall, let's go down to an daily. If we fall, this is where I project we're likely to end. This blue line, the price levels we were in say March of 2021, a big zigzag pattern to get us right here. And I'm giving my opinion, comes from my practice of Elliott wave theory. I'm not trying to go too deep into that right now. That's for the Patreon. If you'd like to learn that, join. It's very affordable, and you get one-on-one and group training. Okay. This is pretty aggressive. These big red candles. Nobody's brave being standing up to stop this. The good news is, in the short term, not much good news. That the good news is, over the next, say, day, tomorrow and into, say, Thursday morning. I say tomorrow. If you're watching this video, it is midnight while I'm recording this. Midnight going into Wednesday morning. We should get a good run, over a very strong run, today and into Thursday morning. That should take us into this area. We should revisit this candle here that we started on the 22nd. And so the 22nd would be what? Thursday? Yeah. So I'm expecting pretty aggressive retrace. But don't let that fool you. It ain't over. We're at least coming here. And we got here a volatility indicator from the beginning of the year. This is also called the fear index. So this corresponds with money in the futures market being bet against the stock market. Okay. And so you can actually trade this symbol or trade this indicator. It goes by various symbols. Some of them are leveraged, some of them aren't. But people who bet against the market have been winning for the most part. They haven't lost anything. And I think this thing is going much higher. It's at 33 now. I'm expecting to get closer to 58. So we got a ways to go. But for the next day, day and a half, it's going to look pretty good. But I think that's a sucker rally. I think we're going to trade in the channel until the middle of May. We're going to trade up here and then we're going to kind of go sideways steadily into the middle of May. Well, more like here, mid-May. Now, I will say what's concerning me is this weekly chart. This chart is the only thing that's making me kind of putting some pause in my relative optimism. Okay. In Elliott wave parlance, this would be like a wave 4, and there are 5 waves in the structure, and I can make a strong argument per Elliott wave theory that we have. I think it's a strong argument that we could get another push higher to a 5th wave and higher highs, but we can't fall much below this. If we do, then it'll start to violate typical price pattern, price structure for Elliott wave theory, wave 4. So I'll be concerned if we go much below this blue line. Now, in this momentum oscillator, we're going to the negative side, which means that the number of cells is far it's already overwhelmed the number of buys. So the momentum, the balance is tipped towards the negative. Now that's happened before, but every time it happens, it's a cause for concern because the body it doesn't have to turn around and find its way out. And so we've kind of entered the danger zone in terms of momentum. We're on the negative end, but we'll see. And I don't really see any sign of strength in here, none. But the same thing happened in 2020. We went negative, and the markets jumped in to capture stocks at a bargain price. It doesn't have to happen. It doesn't always happen. But I think it could happen this time because like I said, I can, because in a hell decline, I think we should be further along. We should be further down by now. It doesn't take that long for prices to really make a severe decline if the sentiment is aggressively negative. So there's enough positive sentiment fighting to keep these rebounds like this. It's pretty steep. So at this moment, we're still within the range of price action that leaves the door open for this being a wave 4, which is a normal but it's it's aggressive. You lose about 38%, but that's normal. You know, if we go more than that, it then I will shift and I'll really join the hell camp. But it could. See what we got here. Yeah, we saw that. And yeah, just a picture of Google. Their high was in November. It's been struggling. Weak earnings. Big YouTube miss. YouTube earnings was 6.87 billion versus 7.5 billion for last year. I mean, no, that's what they expected. Um, so it underperformed. So this should be of interest to content creators because if that trend keeps underperforming, the ad rate, the payout amount that YouTube makes provides has to go down. If they're not getting the revenue to support the current fee structure, then it has to be reduced. I would expect that. So save your money. Save your money. Get prepared in case YouTube says they're going to reduce the amount of money you get. Just be thinking that. Kind of get your what if scenarios together in your mind. Okay. And then we got a chart here of the Treasury yield. This is basically the picture of the impact of the increase in the interest rate and how it affects treasuries, newly issued treasury bonds with that reflect the increased um, interest rate. So that index of 13-week treasury bonds, treasury yield. This is it. And over the last month, we've had, let's see, just to peek at the winner. It's a pharmaceutical. Yep. But it's not so simple as, hey, run out and go buy pharmaceuticals. It's not that simple. Because on the decline side, and I picked a month because this current leg down started the end of March. Just about a month from now. And on the decline side, the biggest decliner, drum roll. Come on. Also a pharmaceutical. So the best performer has been a pharmaceutical stock. The worst performer has been a pharmaceutical stock. So this is a market for chart readers. And you really got to get your skill up. Because it's dangerous out here. This bear wants all your money. And this is the one that was the worst performer. It's called Blue Water Vaccines. It was 60 at the end of March, or middle of March, March 15th. It was $66. It's $4.16 now. This bear wants your money. Wants all your money. That's all I got. Stay tuned. I wish you were in the Patreon. We talk about where some stuff that's working. And I'll be bringing it to you here soon. But you can get it first if you join there. All right. Peace, fam.